Okay, we'll start. So we were into the discussion related to exclusions from supply, and in that we have seen S, P and A. S for sovereign functions of government, that is all activities of government other than Department of Post, transportation of goods or passengers, airport or port, and services to business entities. Then P for post. What post? Government post, constitutional post, nominated post. And SPA, A for actionable claims other than specified actionable claims. What is that specified actionable claims? Horse racing, casinos, B, betting, L, lottery, O, online money gaming, and G for gambling. Now we are moving on to the next area. First, what is actionable claims means? Actionable claims means, so it is like an instrument, and using that instrument I will have right to receive a benefit or recover a debt, and which can be transferred from one person to another person. So like for example, you take a bill of exchange. When we have a bill of exchange, we have right to receive a benefit, yes, or recover a debt. And is it legally enforceable? Yes. Transferable from one person to another person? Yes. And whomsoever is holding that instrument, that person is able to recover the debt, correct? The holder of the bill of exchange is entitled to recover the debt. So bill of exchange is an actionable claim. Same way, is lottery ticket an actionable claim? Yes. In lottery ticket, suppose you have a lottery ticket, means you have right to receive the benefit. Transferable? Yes. And legally enforceable? Yes, in the state where lottery system is prevailing, and the holder of that lottery ticket is entitled to receive the prize money if prize is awarded for that lottery ticket. So therefore these are all called as actionable claims: bill of exchange, promissory note, lottery ticket, etc. And not all actionable claims are covered under supply, only the specified actionable claims are covered, and remaining actionable claims are excluded from supply. Then look into L, legal fees collected by the court or tribunal. Court or tribunal will be collecting some legal fees whenever you file an appeal in the court or tribunal. They will be collecting something called as court fees. Is that fees for giving judgment? No, not that. So that fees is for the purpose of documentation purposes. So this fees will not be covered under GST, and it will be excluded from supply. So that is this legal fee collected by court or tribunal. Then look into the next point, land sale, including sale of immobile property. Why? Right now we are studying what? Goods and services tax. So goods do not include immobile property. So that's why sale of land and sale of building will not come under GST. But sale of building will come under GST if part consideration is received before completion certificate. So for example, so you are a builder, you are constructing some flats. Usually when will you sell the flat? After completion or before completion? Before completion you cannot sell. Huh? You can sell. You can sell. Before completion also you can sell. So you will collect some advance and you will book the flat, correct? So either before completion or after completion. If you sell after completion, it is excluded from supply. So because entire consideration received after obtaining completion certificate or first occupation, whichever is earlier, is excluded from supply. So you are a builder, you are constructing a flat, and you are getting entire consideration after completion certificate. When you will get entire consideration after completion certificate means if you are selling after completion certificate. If you sell before completion certificate means what? You are allotting the flat to one person, means you will collect some advance, correct? Now in that case it will be chargeable to GST. What is chargeable to GST? Is the advance chargeable to GST or entire amount chargeable to GST? Entire amount chargeable to GST. So there are three possibilities that could arise. See that in the next page. GST on sale of flats or buildings if entire consideration is received before obtaining completion certificate, or if entire consideration is received after obtaining completion certificate, or if part consideration received before and remaining consideration received after obtaining completion certificate. In these three, which is excluded from supply? after completion certificate is excluded from supply. Okay. So means second case is excluded from supply, means GST not payable because it is treated as sale of immovable property. Whereas in the first case you see consideration received before completion certificate. Last case also you see part received before and remaining after. These two are covered under supply and GST payable. And how is it treated as? It is treated as works contract service. So which means after completion certificate there will be only one agreement, that is sale agreement. Whereas before completion certificate there will be two agreements. One is for land, another is for construction. You understood or not? Before completion, if you buy a flat, there will be two agreements between builder and you. Agreement number one is towards the land, UDS. For undivided share of land there will be one agreement, and again there will be another agreement which is construction agreement. First they will allot the UDS to you and thereafter they enter into a separate construction agreement with you. So therefore on that construction agreement whatever is the consideration, GST will be payable on that. Okay, is it clear? But in this regard I wanted to explain to you one exemption as well, that is 1/3 is only deducted towards the value of land or undivided share of land. For example, you pay 40 lakhs for the land and 40 lakhs for construction of the building. Now what is your total contract price for the flat? 80 lakhs. But you know what is the chargeable value for GST? 80 lakhs minus 1/3 is only reduced. How much you paid for land? 40 lakhs. But how much is the reduction available? 80 into 1/3, that is 26.67 lakhs is only allowed as deduction. Means remaining amount will be chargeable to GST. So which means land also getting taxed, sir? Yes, unfortunately yes. Suppose if you don't want any GST to be paid, then you should have purchased the building after completion certificate, then there won't be any GST. What is the rate of GST on sale of flats? 7.5% without ITC in case of non-affordable housing, and in case of affordable housing the rate of GST is 1.5%. So this is the rate of GST payable on residential flats, whereas on commercial units the rate of GST will be 18% with ITC. Should we remember these rates? No, we don't have to remember the rates, but here you should know that the rate is without ITC, which means those builders who are selling the residential flats cannot take ITC on their inward supplies. For example, I am a builder, I am constructing a flat which is sold after completion certificate, which means first of all it is not a supply. So the question of ITC will not be there. Will you agree with me? Yes. Whereas if I am selling the flat before completion certificate, either full consideration I may receive now or part consideration received now and part received after. Is it covered under supply? Yes. Will it be chargeable to GST? Yes. And if it is residential unit, what is the rate of GST? Either 1.5% without ITC or 7.5% without ITC. So therefore, can I take input tax credit on the cement, bricks, building material purchase? No, means it will be added to my cost. Understood? Suppose if I sell the commercial units, then sale of commercial units same way, before completion certificate, if I am getting some consideration, will it be chargeable to GST? Yes. And what will be the GST rate? 18% with ITC. Means can I take input tax credit on the inward supplies? Yes, I can take input tax credit on inward supplies. Is it clear? Now kindly make note of this information in your notebook. Say this: sale of building or units. Sale of building or units, anyway you can call it as units, in the sense units in a building, flats. Okay, sale of building or units in a building. So this is divided into two. entire consideration after completion certificate. Entire consideration received after completion certificate or first occupation, whichever is earlier. What is completion certificate? Completion certificate is a certificate issued by the local authority or urban development authority. Whenever the project gets completed, it is known as completion certificate. So generally, can you do any construction without any approval? Without approval, can you construct? No. You should get the approval. From whom you should get the approval? From the urban development authority. For example, in Chennai, it is CMDA, Chennai Metro Development Authority. Like that, everywhere there will be a development authority. From that authority, we need to get the approval, plan approval. And once we complete the construction, so we need to get the completion certificate for the project. Okay, that is called as completion certificate. Usually, in every state, they call it as completion certificate only. Whereas in Maharashtra, in Mumbai, they call it as occupation certificate, OC. Here it will be called as CC. Across everywhere it will be called as CC only. But there it will be called as occupation certificate. There they will not give completion certificate for the project. For every flat, they will be giving a occupation certificate. Because in Mumbai, there is a trend of, like customization in the flats. So what they do is that they will not make the flats ready to use or so like tailor made. It will be like depending upon your need, they will make the flats. This kind of model is coming even in south also. Okay, so like if you see this one crust like that one property is there, which is in Nungambakam main road opposite to Taj Hotel. One big construction is there. So that project name is One Crust. So I am not promoting the project and all, I am just giving you an example of that. So in this One Crust, the advantage is that they made the bare shell. Each flat there is 3000 plus square feet only. So they don't have 1 BHK, 2 BHK and all, everything will be so 4 BHK, 5 BHK such kind of flats only, because they are giving swimming pool in each and every flat. So every flat is an individual flat and independent swimming pool facility and gymnasium, everything is there in that. So mainly that is for celebrities and all, not for you and me. And this particular flats and all, the advantage is like there is a bare shell, there is nothing. The moment you open the door, nothing, just a hall. There is nothing in that. Now, depending upon your requirement, what kind of interior you need. Say you need 3 bedrooms with one very big hall, one bathtub, and one separate rooms, etc. Whatever is your requirement, depending upon that, they will customize and give. They will have multiple options, and that separate cost. That is separate cost. Now in that case, and one flat will be like what, 3 crores, 4 crores will be per flat there. Okay, that's why I told you that with that we can buy 2-3 houses. Okay, and but people are ready to spend 5 crores, 6 crores and all they are spending in Chennai for one flat. Okay, flat only, not individual house. Okay, so this advantage is that they will be able to get as per their requirement. Now we cannot give the completion certificate for the project. Flat wise we need to give the occupation certificate. So this model is famous in Mumbai, and that's why in the law they have changed it to completion certificate or first occupation, whichever is earlier, because usually completion certificate they will give only when all the flats are completed. So therefore first occupation only will be coming before. Okay, so that is this entire consideration received after completion certificate or first occupation, whichever is earlier. Then is it covered under supply or not covered under supply? Not covered under supply, not a supply. Can we take ITC on in-wet supplies? ITC not available on in-wet supplies. ITC not available on in-wet supplies. Then suppose if entire consideration, so we will put it like other cases. Other cases. What is other cases means? Entire consideration before completion certificate or part consideration before and part consideration after. Other cases. In these other cases, is it covered under supply or not covered under supply? Covered under supply. Covered under supply. Now, so what will be taken as the value? Value for GST. How much will be taken as the value for payment of GST? Gross consideration minus 1/3 towards land or UDS, undivided share of land, UDS of land. Gross consideration minus 1/3 towards land or undivided share of land. So 1/3 will be reduced. So on remaining amount only GST will be payable. Is it clear? So this we have as a like exemption, because on land there should not be any GST for that. And gross consideration to be taken means the total amount that is collected by the contractor or builder. Now this we will divide into two, whether it is residential or commercial. If it is residential, then the rate of GST will be 1.5% for affordable housing, and non-affordable housing it will be 7.5%. Sir, what is affordable housing? So depends upon the square feet here, like square meters, they call it as square meters. In metro cities, it will be 60 square meters. 60 square meters means if you convert into square feet, it will be 632 square feet. 632 square feet means what type of flat? 1 BHK, 1 BHK, 1 RHK. Okay, so that, what is that? 1 RHK means 1 room, hall, kitchen. BHK means bedroom, hall, kitchen. Okay, or 1 RK, room, kitchen. Okay, this is what it will come in 600. How in 600 we can make a 2-bedroom house? Not possible. So that is 632 square feet exactly. Whereas 60 square meters, they call it as 60 square meters. And in case of that, in non-metro cities, 90 square meters. But the total cost of the project, like total cost of the flat, not exceeding 45 lakhs. Then it will be called as affordable housing. So what is affordable housing? Metro, of course it's not for exam, but in case in question, if they give 1.5, 7.5, you should know what it is. That's why I am telling you, because in exam they will give 1.5% sometimes, 7.5% sometimes, rates will be given. That's why you should know. So no need to remember this provision, just try to understand. Usually the consideration of the flat will be not exceeding 45 lakhs, and square meters will be 60 square meters in metro, non-metro it will be 90 square meters. Then it is affordable. For that the rate of GST will be 1.5%. For other flats the rate of GST will be 7.5%. But in exam they will be giving that rate. You don't have to worry, because rates related provision and all you don't have to remember. It will be given in exam. So therefore on residential, what is the rate? GST at the rate of 1.5% or 7.5%. And commercial, what is the rate? GST at the rate of 18%. And in case of residential, whether ITC available or ITC not available? ITC not available on inward supplies. This you should know. And if it is GST 18%, ITC available on inward supplies. So got the clarity here? So there are multiple points which comes in different places. I just connected it here for your reference. So tell me, when sale of land and building is excluded from supply? Sale of land always excluded from supply. But sale of building is excluded from supply when entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. And the major loophole that many people are doing today is that they will collect the consideration in cash before completion certificate, and they will book the flat in that person's name, but there won't be any written contract, etc. and all. And thereafter what they will do, once a completion certificate they have obtained, they will receive the check for full amount. They will receive check for full amount and they will return the cash what they have received. So in records it is like entire amount is received after completion certificate and there won't be any GST on that. This is the prevailing practice today. Okay, today many people are following this to avoid the GST completely, because they will not get ITC now. Now the rate has been changed to 7.5%. They will not get ITC. So means that will be added to the cost. Again, if the 7.5% is also charged to the customer, so there will be increase. 7.5% is a big amount. You take a 1 crore flat, 7.5% is what? 7,50,000. That's a big amount. So they will not be interested to pay. So they will go for this model. Okay. So this is a loophole. And then first occupation you see below. What is this first occupation? I told you first occupation we have to see with respect to one flat which is occupied by a person. Say date of commencement of construction is 25/3/2019 and first occupation on 15/5/2020. What does it mean? So during this stage, so 10 people book the flats. Out of these 10 people, one person will occupy the flat. Means one flat is registered in that person's name. So which means, so first occupation is 15/5 and that will be deemed date of completion. Thereafter, any flat which is booked will be excluded from supply. You understood? Why? Completion certificate, even though they are getting for the project on 28/9, but first occupation or completion certificate, whichever is earlier, the earlier date is 15/5/2020. So as on this date, how many flats got booked? 10 flats. On the 10 flats only GST will be payable. Booked means what? They would have paid some advance, correct? Means part consideration before, part consideration after, entirely it will be covered under supply. Whereas after this some 25 flats and 5 flats got booked, that will be excluded from supply. Okay. So that is about this concept. Then next one, E, S, P, A, L, L. We completed E. E for employee to employer in the course of employment is excluded from supply. Means employee who is getting salary from the employer not required to pay GST. And they use the word in the course of employment. What if it is not in the course of employment? Then it may be covered under supply if it satisfies 71A, 71AA, etc. For example, there is a chartered accountant who joined a company in finance department and for a salary of 12 lakhs per annum. This 12 lakhs per annum is not a supply, whereas that chartered accountant is doing one audit, one forensic audit for a branch which is not as per the scope of work as per employment, but based on the management's request, he is doing a forensic audit for one branch and he submitted the report. As he did this forensic audit, which is out of the scope of his work, a separate amount of 50,000 rupees is paid to him by the management. So this 50,000 rupees, is it in the course of employment? No, it is not in the course of employment. So it will not come under exclusion from supply. Will it become supply under 71A? 71A activity. What is the activity? Forensic audit. Forensic audit. Consideration 50,000. Is it in the course or furtherance of his business? Yes. Related to his profession. So therefore it will be coming under supply 71A. Understood or not? Why is it coming under supply 71A? Because it is not in the course of employment. So why is it not in the course of employment? From where we will know that? We need to check the employment contract. Contract of service between the employer and employee, if you see, is as per the contract, is he getting that money? Yes. Then it is covered under employment contract, not a supply. If it is not because of the contract, separately if he is getting that, then you need to interpret based on 71A or B, etc. Then D, death related activities here. Funeral, burial, crematorium, mortuary, including transportation of the deceased, all these activities are excluded from supply because all these are in relation to dead body and at least after death. So that soul should rest in peace. And on that also, if GST is levied, so then what if the legal heirs throw the dead body in the dustbin, then it will be difficult. So that's why, but sir, cost will be there, it's not free. Yes, better to save some money for that now itself, okay. Don't believe in next generation. Next generation are more stupids than you understood. So like, don't believe in the next generation, and now itself save some money and keep for the final rites, whatever activities and all, because easily today, as on today, if one person die, no, and if you take Hinduism, as per the religion, we need to do lot of activities, easily 1 lakh to 1.5 lakh will be the cost that is required. Crematorium and all, burial ground, no, burial ground concept in not in every caste it is there. So usually cremation only they do. Cremation, we don't have that much space in cities and all. So therefore electric crematoriums are there. 25,000 rupees for what? Converting body into ash, okay. Yes, crematoriums, electric crematoriums are there, wherein they will put your body and they will convert into ash, and they will give in one bowl, no, one pot they will give ash. So that for doing this 25,000 they will be charging. Free crematoriums are there in Chennai, government operated, but pre-booking everything. How we know when the person will, okay. So real, how we will know that? So queue is there, 4 or 5 dead bodies they are keeping. So due to that reason, paid crematoriums, and thank God there is no GST on that. Then this Dandanaka dance is there, na, till the time from the house to the burial ground and all. So for that also we need to pay. It's not free. That ice box, then that one chariot, gold chariot will be there. All these are charges, but on that there is no GST. That is what? Funeral, burial, and funeral. Lot of people will be coming and performing, and they charge some money. For that some specified people will be there, okay. And that funeral, we call it as funeral, depending upon the religion, caste and all. And this crematorium, mortuary, then transportation of the deceased. Remember, transportation of dead body in ambulance is not a supply. Transportation of patient in ambulance is exempted supply. You understood? You should not interchangeably write in exam and lose marks. Transportation of dead body, if you write exempted, answer wrong. Because first of all it is not a supply. So transportation of dead body is not a supply. But transportation of patient, we have one healthcare services, there we will learn transportation of patient is exempted, okay. Then next, yes, sale on high seas, but up to this, can you tell me once? SPALLED, S for? That is all activities of government other than four activities. That is Department of Post, transportation of goods or passengers, airport or port, services to business entities. Then P, post. What post? Government post, constitutional post, nominated post. Then SPAL, sorry, A, actionable claims other than specified actionable claims. L, legal fees, fee collected by court or tribunal. Then another L, land sale, including sale of building, where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then E, employee to employer in the course of employment. D, death related, that is funeral, burial, crematorium, mortuary, including transportation of deceased. Now see this, sale on high seas basis, this refers to sale before import. Sale before import. How it works, how it functions, I have given in page number 8. Sale before import, page number 8. Listen, there is one person, Mr. Rajesh, who is a original importer. He places an order with the foreign seller for goods worth $10,000, and foreign seller will hand over the goods to the shipping company. Why? Because foreign seller has to transport it to India, right? For that he will hand over the goods to the shipping company. As soon as the goods are handed over to the shipping company will give a document of title to the foreign seller called as airway bill or bill of lading. In case of airways, the document name is airway bill. In case of ship, that is vessel, the document name is bill of lading. Means whomsoever is having the airway bill and bill of lading, he will be called as the owner of the goods. To that person the goods will be given. This is called as document of title to the goods. You would have studied this in Sale of Goods Act. Okay. So this airway bill or bill of lading will be given to the foreign seller. Now the foreign seller will send that airway bill or bill of lading to Mr. Rajesh, the original importer. Understood these 4 steps? First, Rajesh placed order with the foreign seller, goods value $10,000, and the goods are handed over to the shipping company. Shipping company gave the document of title, and the document of title is in the hands of Rajesh now. Now what happened? The goods are in transit. When the goods are in transit, Rajesh identified a buyer, Mr. Satish, and he don't want the goods. Who don't want the goods? Rajesh don't want the goods. But where the goods are in right now? Transit. So what Rajesh did is that he sold the document of title to Satish, because Satish in need of these goods. So he sold the document of title to Satish, and for which Satish paid $11,000 to Rajesh. Is it clear? Why he will pay extra? Many reasons. So Rajesh has to get a profit margin, or the price of the goods in the international market would have increased, or it will take time for Satish to get the goods. So if it is now already the goods are in transit, if a new order is placed, it may take time. So there are many factors because of which Satish is ready to pay $1,000 extra to Rajesh. Now this $11,000 which is collected by Rajesh is excluded from supply. So Rajesh is not required to pay any GST on $11,000. So Rajesh is selling the document of title na, for which Rajesh gets $11,000 from Satish. On that $11,000, Rajesh is not required to pay GST. Why, sir? Why not required to pay GST? Because who will be called as importer now? Rajesh or Satish? Satish. And Satish will file the bill of entry at the customs and complete the customs formalities, pay the customs duty, because the importer is not Mr. Rajesh. I told you, whomsoever is holding the document of title, that person will be treated as the owner of the goods. So who is the owner of the goods here? Satish. So Satish is the importer, and Satish should complete the customs formalities. So Satish will pay customs duty on $11,000. Satish will not pay customs duty on $10,000. So what is the original price at which goods are imported? $10,000. But what is the price at which Satish is purchasing from Rajesh? $11,000. So customs duty payable on $11,000. Are you understanding? So Satish is paying customs duty on $11,000 including IGST. Because when we pay customs duty, IGST, social welfare surcharge, correct or not? Today only I told you. So we have to pay customs duty, social welfare surcharge and IGST. So as IGST already paid by Satish on $11,000, if Rajesh also pay GST on $11,000 and in turn recover from Satish, then Satish has double taxation. To avoid that only, Rajesh is excluded from supply. Got it, pa? So Rajesh is not required to pay GST on $11,000 because anyhow Satish will pay customs duty including IGST on $11,000, and Satish will get the release of goods on payment of that customs duty. So to whom this $11,000 customs duty is payable? To the customs, because the shipping company will unload the goods in the customs area, customs port or airport. So the goods will be under the control of customs authorities. Only if the customs duty is paid, the goods will be released. Understood? Now, you may get a doubt, sir, how customs officer will know that Satish has purchased for $11,000? Simple. The goods are in whose name? Goods. Whose name? Rajesh name. Who is filing the documents with the customs? Satish. So customs department will ask Satish to get the purchase order. Boss, you are not the owner of the goods. Okay, document of title is in your name. Means you purchase the goods from someone else, Rajesh. You get me the invoice, purchase invoice. At what price you have purchased, you get me the invoice, or you give me the purchase order. So in that purchase order or sale order, the amount of $11,000 will be there. So therefore customs department will come to know about that. Sir, if that be the case, to save the customs duty, so what we can do is that Rajesh can sell for $8,000 also. Yes or no? He can sell for $8,000 and collect that $2,000 in cash. Possible? Yes, definitely it is possible. Then Satish will pay customs duty on what? $8,000 only, including IGST. But here try to understand, customs department will definitely question Satish that, boss, original price at which goods imported is $10,000. Why are you paying customs duty on $8,000? There should be proper explanation or justification that should be given by Satish. There could be genuine case also. Sir, the life of the goods have come down, so I purchased at a lesser value. Original life was 1 year. Now the life is only 6 months. So I purchased at a lower value. Or the price in the international market has come down. So I am purchasing at a lesser value. Or the goods are defective. Some of the goods are defectives. So I am purchasing at a lesser value. Some genuine reason if it is there, then in that case, customs duty will be payable only on $8,000 including IGST, not on $10,000. You understood? So if Satish is purchasing at a price higher than $10,000, on that price. If Satish is purchasing at a price lower than the $10,000, on that price. Suppose if Satish is not giving proper justification to the customs officer, then what customs officer will do? Will reject the value and he will determine the value as per rules. Customs officer will do the valuation. So they will do like this identical goods, similar goods like that, some comparable values will be there, that will be taken as the value of these imported goods. Got it? Then, now this is in case, so what you need to know here is that Rajesh is transferring the document of title to Satish, for which Satish will pay some consideration. This consideration received by Rajesh is during the goods in transit. This is not by way of sale of goods, this is by way of sale of documents to title. They are not selling goods here, what they are selling is documents of title. So this consideration received is excluded from supply. Clear pa? This is about sale on high seas or sale before import. Then look into the next one, L. Liquor license by state government. Generally, some states will not be selling liquor because they will be following Mahatma Gandhi ji. Because Mahatma Gandhi ji never wanted the liquor to be sold. That was the promise which he has taken from Nehru. But Nehru, as usual, will not keep every promise and all. So therefore, he broke that promise long back itself. So yes, as soon as independence came, so Mahatma Gandhi ji told to Nehru, see, Indians are dumb fellows. They will be addicted to alcohol and they will not know what they are doing, and be careful. So we fought a lot to get this independence. All these kings and all gave their kingdoms and allowed the Britishers only for the sake of this liquor. Liquor and female, these are the two dangerous weapons of British government. Okay, it's not arms, ammunition, etc. and all. Only with the two they have taken over our country. So because these bloody idiots, kings and all, got this weakness of either liquor or the girls. So through that itself they have occupied the kingdoms, and so therefore Gandhi ji said, be careful, I know. So again the same problem will happen. But Nehru said, no, no, for some days we will allow not girls, I mean liquor. So for some days we will allow liquor. So because then only the revenue government will be getting. So that is very much required like that. So Gandhiji said, no, you are taking a huge risk, not required. He said, no, everything will be under control, don't worry. And soon after Mahatma Gandhi ji dead, so then Nehru don't have any promise to be given. See, Only when the people are alive, only the promise we need to think of. When people are dying, okay, will that Atma will come and ask? Who will ask? No one will ask. So therefore, he left it on a free run. And all his successors only thereafter. So they also did not think about it. Where it started is like, state governments were allowing the people to sell the liquor. And now where is it going? State government itself is selling liquor. You understood? And so some states, no, we are followers of Mahatma Gandhiji, we will never be selling liquor. Some states have banned. Yes, some states are there where liquor sales is not at all there in that states. In some states, okay, in a way we will follow Gandhiji, but at the same time revenue also we need. So we will not sell, we will permit others to sell, but we will collect the license fee. Okay, like that some states are there. Maharashtra, Kerala, etc. and all, if you see, even Telangana, liquor shops are there, wherein government will permit them to run the liquor shop and pay the license fee to them. To whom? To government, state government. And never liquor is a central subject. It's always a state subject, you understood? Central government interference is zero in this, nothing. And some states like Tamil Nadu, Andhra Pradesh, so some states, what they do is that they themselves will sell. If we give license, we get license fee only. If we sell, entire money is ours only, like that. So we started selling also. And when state government itself is selling, no problem about GST. Why? Sale of liquor, no GST on that, correct? Already we discussed. Whereas the previous case, you see, government is not selling liquor, they are permitting someone to sell liquor, for which they got the license fee. On that license fee, whether GST payable, because it is not sale of liquor, it is giving license to sell the liquor. On that license fee, GST may come. Due to that reason, it is excluded from supply here. Now, one shop got the license to sell the liquor and they spent 30 lakhs to get the license. Yes, usually bidding will happen. For the shops, license bidding will happen. In that bidding, they will participate and they will be quoting how much is the license. It's not something fixed by the government. Usually bidding process will happen. So they will tell 20 lakhs, 30 lakhs, 40 lakhs, even some liquor shops will go to 60 lakhs also. What? License fees. Sir, how they will recover that? Easily they will recover, yeah. What are you thinking about the turnover of liquor shops and all? Huh? Sir, 6,000 rupees which came out of government's account in the form of floods, like flood only it went in liquor shops. Yes. Recently, Chennai, floods and all came. And every house which has suffered in floods, they gave 6,000 rupees. And majority of the 6,000 rupees, what they did? Repairs. No. What repair? Their body repair, mentally. So they have repaired themselves. How? There are some divine shops called as Tasmak, like that, okay? In that shops they went and they have repaired themselves for 6,000 rupees. You understood or not? And turnover and all, super turnover, easily. Pongal before, Pongal after, you see the turnover, you will get to know, 1,000 rupees they gave, boomerang, it will come back. Amazing policy here, okay? And therefore, here, turnover of the shops and all, amazing turnover, they will recover this. Now, one shop purchased for 30 lakh rupees liquor license. And they are not able to sell the liquor properly because of the heavy pressure of some politicians in that area. What they will do? They will be selling it to some other person. So usually liquor license can be transferred. Say I got the liquor license, I transfer it to you. I purchased for 30 lakhs, I may transfer to you for 35 lakhs. Now I got 35 lakhs from you now. Covered under supply or excluded from supply? Covered under supply. Only liquor license granted by state government is excluded from supply, but transfer of liquor license or renting of liquor license is not excluded from supply, that will be covered under supply. You understood? You just write down somewhere in the book itself. Transfer of liquor license by one person to another person, below itself you can write there, transfer of liquor license by one person to another person, transfer of liquor license by one person to another person is not excluded from supply, is not excluded from supply. Then next point you see O, that is outside the country movement of goods. What is that? Seller in India, buyer also in India, but the goods are originating outside India and terminating outside India. For example, I am seller located in India and I have a branch in Germany. You are my buyer, you are also located in India, but you have a branch in Australia. Now I am sending the goods from my branch in Germany to your branch in Australia. So it is what? Outside the country movement of goods. Even though you may make the consideration in India, the financial impact of this transaction will happen in India, but then also it will be excluded from supply. Are you understanding? Goods are originating where? Germany. Terminating where? Australia. But its financial impact is in India. Even then it will be excluded from supply. Another example I will give you. I am selling goods to one person outside India. I am selling goods to one person outside India. But the goods originates outside India and terminates outside India. So we call it as import from one country and export to another country. It may not touch India. I am placing a purchase order from one person and I am selling it to another person, but I am located in India. I made the sale. And for which should I pay any GST? No, because the movement of goods is completely outside India. So GST is not payable on this transaction. It is excluded from supply. Then look into warehoused goods under customs sold. What is this warehoused goods under customs sold means? Just like how we saw high seas we saw na, same like that. But what happened here is that I am importer, Mr. Rajesh, same story. I am importer, Mr. Rajesh. Now the goods reach the customs. Goods reach the customs and I took the goods to the customs warehouse without payment of customs duty. So can the goods be deposited in warehouse without payment of customs duty? Yes. These warehouses are called as customs warehouses, which are licensed by the customs authorities. I can deposit the goods in the customs warehouse without payment of customs duty. Only when I clear the goods from the customs warehouse, I need to pay the customs duty. What is the advantage of this? Deferment of customs duty. Today I imported, boss. Today itself, if I need to pay customs duty, say I have to pay some 1.5 crore as customs duty, because the value of goods will be somewhere like 5 crores. Usually the approximate customs duty will be 30%. So 5 crores, I need to pay 30% means what? Some 1.5 crores, like that I need to pay as customs duty, for example. And to pay this 1.5 crore, I don't have money. I place the order, the goods came, I don't have cash now. So what I can do? I can deposit the goods in the warehouse without payment of customs duty. Maybe I may get the fund after 2 months. So 2 months I will be keeping the goods in warehouse. After 2 months, once I got the fund, I will make the payment of customs duty and I will get the goods released from the warehouse. And what is the cost I have for this? Warehousing charges. When I keep the goods in warehouse, no one will permit to keep the goods in warehouse free, na? I have to pay warehousing charges. It's okay. It is the cost which I am taking in order to save the money. Otherwise today I need to borrow, and I need to pay customs duty, and for 2 months interest cost will be there, which is huge. Compared to that, the warehousing charges will be less. So therefore I will deposit the goods in the warehouse without payment of customs duty. Thereafter I will pay the customs duty and clear the goods from the warehouse. This is the advantage of deferment of customs duty. But for deferring the customs duty, I have a disadvantage called as warehousing charges. These warehousing charges also I can avoid if I convert my own warehouse into customs warehouse. So can we do that? Yes, we can. This is called as private warehouse. There is a concept called as private warehouse in customs. What is private warehouse means? the importer's warehouse converted into customs warehouse by getting a license for that warehouse is known as private warehouse. Here completely I will have advantage. In what way? I don't have warehousing charges also. I will completely defer the customs duty. So I will import the goods, keep it in my warehouse. Whenever I am using it for production, at the time only I will pay customs duty. You got it? But not to every person they will be giving license to operate a warehouse. There are certain regulations and you need to satisfy certain criteria, make some deposits, then you will be able to get the license. Usually any license you get from government, you need to follow certain conditions, like that only. Now coming back to the point, what I was discussing is that I imported the goods and I deposited the goods in the warehouse. Now I identified the buyer Satish. You got it? Understood the difference? In the previous example, when I sold, I am Mr. Rajesh. When the goods were in transit, I transfer the document of title. And now also I am transferring the document of title. When? After import, the goods are in the warehouse. Now who will file the bill of entry and complete the customs formalities? Rajesh or Satish? Mr. Satish. Because who is having the document of title? Satish. So Satish will clear the goods from the warehouse by paying the customs duty. Got it? So for transferring this document of title, I got some money now, same $11,000, which is excluded from supply. Why is it excluded from supply? Because anyhow Satish will pay customs duty on that $11,000. Due to that reason, I am excluded from supply. Understood or not? Clear? Then both are same only na sir. What is the difference? From GST point of view, both are same only na. What is the difference? The slight difference is in terms of the time at which the transfer of documents to title happens. In the previous case, that is sale on high seas basis, the documents are transferred when the goods were in transit. In case of warehoused goods, the title is transferred when the goods are deposited in the warehouse. But from customs point of view, customs duty calculation is completely different. Customs duty calculation is completely different. In case of sale on high seas basis, customs duty is computed on what? Value at which Satish has purchased from Rajesh. Correct? And in case of warehoused goods, customs duty will be computed on $10,000, not $11,000, but IGST will be computed on $11,000. Okay, this difference we need to know with numbers only, then only we will be able to identify how the customs duty will be computed. So from here I am taking you to the customs, because see, indirect tax, everything is connected and they can ask anyway. So therefore again when we are discussing there, this we need to know, that's why I am connecting now itself. Done? So please take your notebook, we will learn how to compute the customs duty first. Write down computation of customs duty payable. But this is general here, generally how to compute the customs duty payable. I am not talking about high seas or warehoused goods. This is general, normally. Normal imports, normal import. Let us assume assessable value as 1 lakh, means value on which customs duty payable is 1 lakh. Assessable value means value on which customs duty is assessed. Assessable value AV, that is rupees 1 lakh. Customs duty will be computed based on 3 blocks, total 9 customs duties that we have. How many customs duties? 9 customs duties we have. In that, the first block we have basic customs duty, basic customs duty BCD. This basic customs duty will be at the rate, this will be given in the question. So, we do not have to remember this rate, okay, at the rate of say 10%, but the 10% or 15% or 30% that will be given in the question. You do not have to remember, not that always it will be 10% as the rate. On what? On assessable value. What is the assessable value? 1 lakh into 10%, that is 10,000 is basic customs duty. Then second, social welfare surcharge, always it will be there, and this social welfare surcharge is at the rate of 10% always. It will not be given in the question, but even then you need to take on basic customs duty. Whatever you have computed as basic customs duty, on that 10% will be social welfare surcharge. What is the basic customs duty? 10,000. On that 10%, that will come to 1,000. Then third, CVD, countervailing duty. This countervailing duty will be at the rate that will be given in the question, but it is not applicable on all goods. It is applicable only on 3 goods. Tell me what are those 3 goods on which CVD is applicable? Alcoholic liquor for human consumption, petroleum products, then tobacco and tobacco products. Very good pa. So, why we discuss na excise duty today. So, on that only the CVD will be applicable. So, therefore, only if it is given in the question you need to take that, otherwise you should not take. Understood? So, applicable to petroleum products, okay. First, alcoholic liquor for human consumption, alcoholic liquor for human consumption, then petroleum products, tobacco and tobacco products. Okay, cigarettes is one of the tobacco product. There are a number of tobacco products which are available. Okay, mainly we will not know that. So, people in North India will have lot of idea about what are all the various tobacco products which are there. Okay, because morning itself they will be having like how we brush the teeth, they will keep something in the mouth. Okay, so CVD at the rate that will be given and is computed on what? This will be computed on assessable value plus basic customs duty plus social welfare surcharge. On that it will be computed. Got it? So, CVD is computed on what? Rate given in the question. And what are the goods? Three goods. Only in question when you see these 3 goods you should check the CVD, otherwise CVD is not there. Assessable value, basic customs duty, social welfare surcharge, on that CVD will be computed. And here I am not taking that notified goods, generally I am talking. So, therefore, this step will not be there. Now, if you add these 3, you will be getting customs duties excluding additional customs duties. Customs duties excluding additional customs duties, that is 11,000. But this again comes in computation of customs duty, but there I will not repeat. Okay, so learn now itself. customs duties excluding additional customs duties. Tell me what are the three things in the first block? Basic customs duties at what rate given in the question, on what assessable value. Second, social welfare surcharge at what rate? 10% on basic customs duty. CVD at the rate given on notified goods. What are those notified goods? Alcoholic liquor for human consumption, petroleum products, tobacco and tobacco products. Computed on what? Assessable value, basic customs duty, social welfare surcharge. Now, in the second block, we have number 4, 3 additional customs duties we have here called as safeguard duty, SD, then anti-subsidy duty, ASD, then anti-dumping duty, ADD. So this only when given in the question we need to take, otherwise we don't have to take. And this information we will be learning when we discuss the types of customs duties there. Okay, that is how to, when safeguard duty is applicable, whenever we are importing goods in large quantities. So we are importing goods in large quantities, then domestic manufacturer may get affected, so injured. So due to that reason, there will be safeguard duty in order to restrict the import. For example, you take this furniture. On furniture, we have safeguard duty. Why? Because we are importing lot of furniture today, because of which the domestic manufacturer will get injured. To safeguard the domestic manufacturer, they will levy this safeguard duty so that the price of the imported article will not be cheaper than the price of the locally manufactured article. They follow a fair policy here. So they will levy the safeguard duty such that the price of the imported article will be on par with the locally manufactured article. So we have a choice. Even then, if you want to import, you need to import, because government cannot say no, you should not import. They can only request you to purchase locally, but they cannot compel you not to import. If they compel you, the same way other countries also compel their people to not import from India, then our exports gets affected. You understood? So that's why India never follows that policy of increasing the import price. So to an extent beyond the domestic manufacturer price, they will not do that. They will increase the import price to maintain the price at which those goods are domestically manufactured in India. Okay. Then next, anti-subsidy duty is when our exporting country is giving subsidy to the articles which are exported to India. Example, China government. China has long back started trade war, and what they are doing is that in this toy market, toys, so they have given lot of subsidies to the toy manufacturers. So these toys were imported into India at a cheaper rate. So therefore, majority of the domestic toy manufacturers got killed. So they have went out of the business, because when imported toys are available at 50 rupees and 100 rupees, how a domestic manufacturer will be able to sell at that rate? How they will be able to sell? Because they got the funding from the government, their government. So then in that case, to avoid this scenario, Indian government will be adding some extra duty to offset this subsidy, that is known as anti-subsidy duty. Whereas anti-dumping duty, whenever the exporter will try to dump the goods into India, because you would have manufactured in large quantities, economies of large scale production. So when the production increases, the average cost comes down now, and he will be selling to India to recover the variable cost. We learned marginal costing, he will also learn the same marginal costing. What is that? Contribution positive, sell, correct? Accept the export order if the contribution is positive, he will also learn the same marginal costing, no, correct? So what he will do? Contribution positive, he will sell, because for him it is a new market. But here domestic manufacturer cannot sell at contribution positive, na? So he need to sell to recover his fixed cost also. I don't in a way understand this marginal costing and all. It is one of the stupid illogic is what I feel many times. But the entire costing is constructed on that, and thank God now it became a self-paced module, and in that also they have removed everything as costing, everything will be like strategic management only. So because one of the worst concept it is like you sell at a price to recover your variable cost, enough. Who will recover? Your father-in-law will come and pay fixed cost. So who will pay her? And they will sell here, and here domestic manufacturer cannot do business that way. So that's where anti-dumping duty, whenever exporter tries to, that is exporter outside India, tries to sell to India at a price less than their selling price, then Indian government will be levying anti-dumping duty. These are the 3 additional duties. How to compute that we will be learning in customs later. Then if we add this, we will be getting customs duties excluding IGST and compensation cess. IGST and compensation cess. Then the third block. In the third block we have IGST at, again it will be given, you don't have to remember any rates. Let's take 18% on, sir, it will be computed on what? It will be computed on assessable value plus step 2 total. What is that assessable value? 1 lakh plus what is that step 2 total? 11,000. So 1,11,000. Why, sir? Because this also studied at CA intermediate level, section 15 subsection 2 clause A, inclusions in the value of supply, all taxes, duties and cess by whatever name called other than GST should be included in the value. So while computing the GST, all taxes we need to add. So we are computing GST, so all customs duties we are adding in that. Okay. Then 1 lakh plus 11,000 into 18%, how much? 1,11,000 into 18%, 19,980. Then compensation cess. Compensation cess at the rate of, again it will be given in the question if applicable, and it should be computed on assessable value plus step 2 total. Just like how GST is computed, the same way compensation cess should also be computed. Sir, while calculating compensation cess, should the GST be added? No, don't add GST. While computing compensation cess, don't add GST. Is it clear? So if applicable, that will be given in question. Only in question if they give GST compensation cess rate, you take it, otherwise not required. Sir, on import of vehicles, we pay compensation cess as well. So for example, and you know what is the customs duty payable on import of vehicles, electric vehicles? 200%. On electric vehicles, really here, I am not joking. So we have on import of vehicles, chapter 87, 8702, 8703, say this, 125% on electrically operated motor vehicles, 125% we need to pay, what? Basic customs duty. Okay. So that's why Tesla car no one is importing to India, because so if you take that car value as 30 lakhs, 30 lakhs into 125% we need to pay as, so that is what, 37,50,000 you need to pay as basic customs duty. On that 10% social welfare surcharge, IGST 28%, GST compensation says 22%. Are you understanding? So it will be reaching 200%. That's what I said. Literally, we need to pay that much. So better, you buy here itself. Don't import. So that's why many electric cars which are there at the global level is not coming to India. Even the same way, if you take second-hand cars and all also, majorly you see motor vehicles at what rate? 125, 125, 125, 125. All motor vehicles, passenger motor vehicles is at 125%. Our idiots who buy this Mini Cooper or BMW and all, they will be thinking that I purchased a luxury car. Nothing. Their BMW equals to Mahindra here. Yes, yeah. Because of this customs duty and GST compensations, they will feel like they are purchasing a premium car. I don't see any great difference between Swift and Mini Cooper. You understood? Really speaking. Because in India, Swift is 10 lakhs, means there it would have been some 15 lakhs. But the moment it comes to India, it reaches 40 lakhs. Why? Because of this and all. But our people say, no, I purchased Mini Cooper, brand new. What is the use of it? For a Swift car, or Swift car. Therefore, really, so it's not something great. And don't tell this to them and all. Because of them only, India is getting good revenue. You understood? They should buy. All luxury cars they should be purchasing. Okay. So let them buy. People will be telling, boasting, this feature. You ask them, no, what extra features they have. They will not be able to tell. Brand only. For the sake of brand, they will be purchasing. And they should buy. Really heartfelt, I am saying that these kind of people should be there in India. They should purchase and contribute lakhs and lakhs as customs duty. So government should become rich so that they should not torture us. You understood? So that is about this. Compensations. So compensations is already I told you on automobile there is. So an imported automobile also it will be there. And then next we have SAD, special additional duty. SAD, special additional duty, this will be at the rate of 4%, okay, on same assessable value plus step 2 total applicable to only one case per petroleum products. So definitely it will not be there. Whenever GST is there, SAD will not come. Why? SAD is applicable for petroleum products. So is there GST on petroleum products? No. So whenever GST is there, SAD will not come. Whenever SAD is there, GST will not come. These two are mutually exclusive. And this total is called as total customs duties payable. So what is that? 29,980. Sorry, no, 30,980. 30,980. This is what I said, approximately 30% is what we pay as basic, like general. Ignoring everything, only 3 things I have taken. Check the computation. Basic customs duty, social welfare surcharge, IGST. Compensations also I have not taken. I have not taken additional customs duties. Ignoring all these things, generally itself 30% it will come. Okay. And in this total customs duties payable, total 9 we have, divided into 3 blocks. First 3 is what? Just you tell me what are they. Basic customs duty, social welfare surcharge, and CVD, countervailing duty. Next 3, safeguard duty, anti-dumping duty, anti-subsidy, anti-dumping duty. Good. Then next 3, IGST, compensation cess, special additional duty. Now, CVD applicable in case of petroleum products, alcoholic liquor, tobacco and tobacco products. SAD applicable in case of only petroleum products. And basic customs duty is computed on social welfare surcharge computed on rate 10%. So two rates only you need to remember here. Basic social welfare surcharge 10% and SAD 4%. Remaining and all will be given in the question. Okay. And IGST will be computed on what? Assessable value plus all customs duties up to step 2. Got it? And compensations is also computed the same way? Yes. Understood this computation? This is in which case, pa? Normal import. How to compute the customs duty? Now, write this. Computation of customs duty in case of sale on high seas or sale of warehoused goods. Say this, Mr. A imported goods for rupees 1 lakh, imported goods for rupees 1 lakh and sold documents of title to Mr. B for rupees 1,25,000 when the goods were in transit. Mr. A imported goods for rupees 1 lakh and sold documents of title to Mr. B for rupees 1,25,000 when goods were in transit. Will these topics be explained in customs chapter? No. No, I will not. Then why this much patiently I am explaining? Okay, I told beginning itself, I will not explain in customs, but I will just run through there like a revision only. I will not explain again in detail, but this is not regular batch, try to understand, this is a fast track batch. Okay, so I will not explain it again in customs, but I will quickly revise. We learned this, this is what it is like that. This much slowly, patiently I will not explain. Okay, not possible for me. Mr. A imported good, that's why I am not referring the book. I know those students who purchase in the last minute, you guys don't have book. I am making everyone because of you to write. Okay, otherwise all these things are there in the book. I did not made you refer for this reason. Again you guys will ask, I don't have book, etc. and all. So it's okay, good. Once you write, you will be learning all these things. So write. That's why I am writing. Okay, I am not even dictating. Please write. Mr. A imported goods for 1 lakh and sold documents of title to B for 1,25,000 when the goods were in transit. This is what sale on high seas basis. And let's take basic customs duty as 10%, social welfare surcharge as 10%, IGST as 12%. Okay, IGST as 12%, and we don't have anything else. Compute customs duty payable by A or B? B. Compute customs duty payable by Mr. B. Payable by Mr. B. I will give you 5 minutes time. Try. Just see the template above. Whatever is the relevant taxes or duties that is there, you take that. are these contents in the book, not everything. Just like a theory it is there, problems is not there. Till 24,320. But this illustration and all is not there in the book. Just the concept of warehoused goods, that is in case of high seas how to compute the value, warehouse goods how to compute the value is there. $24,320, yeah. Everyone got that answer or some other answer? 30,400. Two more answers also tell, I will create a MCQ. Third answer, 38,725. 38,400. 30,400. How much you took as assessable value? 1,25,000 should be taken as the assessable value. Listen, in case of sale on high seas basis, the assessable value is not the original import price. The assessable value will be the price at which the subsequent buyer, who is subsequent buyer? Mr. B, is purchasing from Mr. A. So see this, assessable value equals to 1,25,000. 1,25,000, not 1 lakh. And basic customs duty at the rate of 10% on 1,25,000. 1,25,000 into 10% is how much? 12,500. Then social welfare surcharge at the rate of 10% on basic customs duty, that is 12,500. That will be 1,250. Now you need to add this. So 13,250. Sorry, 750. And IGST at the rate of 12% on 1 lakh plus 13,750. 1,25,000 plus 13,750. How much? Final answer? No, this IGST. So 1,25,000 plus 13,750 into 12% you did. You got 16,650. Okay. Now this will be total customs duty payable. 30,400. So someone said there 30,400. Good. Even online students, they said pa 30,400. Very good pa. Remaining answers and all nice. How you got that? How you got? Something you did. So but try to know that this is how the options are created. You understood? You might have done some mistake and you would have ended up with one answer. That answer will be there in exam. Don't believe in any answer that you see in the exam in MCQ. Be careful. Twice or thrice you check it once. Then sometimes none of the above also could be the answer. Yes, really. Sometimes all of the above also could be the answer. CA exams like that only. Okay. And there was one point. Sale of securities. One MCQ actually it is. Sale of securities by one person to another person. Actually securities are excluded from the meaning of goods and services. Option A, neither supply of goods nor supply of services. Option B, not a supply. Okay. So which is your, C is supply, D none of this. Both A is correct, B is correct. It is not a supply and A is neither supply of goods nor supply of services. So really I don't know what to write as the answer there, and in one attempt they asked this question. Then only I came to know that they tested really the knowledge of the student. This neither supply of goods nor supply of services is a term used in a context of exclusion from supply. 7 subsection 2 exclusions are there na, those exclusions are called as neither supply of goods nor supply of service. Actually sale of securities is not excluded from supply, but it is not covered under the meaning of goods and services. So the correct answer is not a supply. You understood? Like this and all they are testing pa, okay, fine. So 30,400 you understood, okay. IGST you took 10% instead of 12, 18% is taken, okay. So it is 12%, be careful, see the rates in the question, and for this and all, no, even if you do mistake there should be a status for that mistake. That's what every time I will be telling. If you do a mistake also that status should be there. Okay, you did the mistake, who you are? CA final students. If you are doing a mistake, it should not be calculation mistake, it should not be like silly mistakes and all. Ah, super, he did nice mistake, like that the valuer should feel, okay. See this. Another case, same thing. Mr. A imported goods for 1 lakh, please write, imported goods for rupees 1 lakh. Mr. A imported goods for 1 lakh and deposited in warehouse, deposited in customs warehouse without payment of customs duty and subsequently sold to Mr. B for rupees 1,25,000 by way of transfer of documents to title, by way of transfer of documents to title. Mr. A imported goods for 1 lakh, deposited in customs warehouse without payment of custom duty and subsequently sold to B for 1,25,000 by way of transfer of documents to title. He did not clear and sell, but he sold by way of transfer of documents to title. And basic customs duty 10%, same, social welfare surcharge 10% and IGST is 12%. Compute customs duty payable by Mr. B. Compute customs duty payable by Mr. B. Now listen. How much will be taken as the assessable value? 1 lakh or 1,25,000? 1 lakh. 1 lakh. That's the difference. Here we should take basic customs duty on 1 lakh and social welfare surcharge on basic customs duty. Okay. Now while computing IGST, please concentrate. While computing IGST at the rate of 12% on A, assessable value plus basic customs duty plus social welfare surcharge, regularly how you calculate, or value at which goods are sold. What is the value at which goods are sold? 1,25,000. Whichever is higher, on that IGST will be computed. So IGST computation alone there is a change. Okay. So I will do it along with you. Assessable value equals to rupees 1 lakh. No change. That is regularly also will take 1 lakh, here also will take 1 lakh. Basic customs duty at the rate of 10% on 1 lakh. that will be 10,000. Social welfare surcharge at the rate of 10% on 10,000, that will be 1,000. Now add this 11,000. Then IGST at the rate of 12% on A regular value. What is that? 1 lakh plus 11,000, that equals to 1 lakh 11,000, or B. What is the value at which these goods are sold to be? 1 lakh 25,000, whichever is higher. So therefore 1 lakh 25,000. On that we need to multiply 12%. $15,000. Then if you add this, you will be getting total customs duty payable. So 11,000 plus 15,000, 26,000. Done. Now, in the previous example, A is required to pay any GST. In the previous, A got some money now, 1 lakh 25. Whether A is required to pay any GST? No. Here A. No. In both the cases, A is not required to pay GST on 1 lakh 25,000 whatever they receive, because previous case, sale of goods by way of documents of title in the high seas, excluded from supplying. In this case, sale of warehoused goods by way of transfer of document of title is also excluded from supplying. So write down in the previous answer below one line, Mr. A is not required to pay GST. Mr. A is not required to pay GST on rupees 1 lakh 25,000. As the same is excluded from supply. Mr. A is not required to pay GST on 1 lakh 25,000 as the same is excluded from supply. Same note you write even below this illustration. Mr. A is not required to pay GST on rupees 1 lakh 25,000 as the same is excluded from supply. For this one, very good question, because they are connecting both GST and customs provisions. There is a possibility, because in one attempt they asked a theory question like this. One theory question they asked, not computation based, but now extending the theory question, they can make a computation question based on this. This could be a probable question. That's why I discussed this. Now I want to add one more combination also here. That is, Mr. A imported the goods and cleared it on payment of customs duty, and then selling to Mr. B for 1 lakh 25,000. You understood? Got the difference? Mr. A imported the goods and A only cleared the goods by paying customs duty, and thereafter he sold to Mr. B for 1 lakh 25. We will see what will happen in that case. Write down. Mr. A imported goods for rupees 1 lakh for rupees 1 lakh and paid customs duty for clearance in brackets basic customs duty equals to 10%, social fare surcharge 10% and IGST 12%, and subsequently sold such imported goods to Mr. B for rupees 1,25,000. Compute customs duty payable by Mr. A and GST payable by Mr. A on sale. Customs duty, can you calculate? $24,000? 24,320. How much will take as assessable value? 1 lakh. Basic customs duty at 10% of assessable value, that is 1 lakh into 10%, 10,000. Social welfare surcharge at 10% of basic customs duty, 10,000 into 10%, that is 1,000, 11,000. Then IGST straight away at 12% on 1,11,000. So that is 13,320 and this is 24,320 total customs duty payable by Mr. A. Now concentrate, Mr. A is selling this now subsequently, so he will take ITC. How much is the ITC available to Mr. A? ITC available to Mr. A 13,320. Then upon sale, GST payable by Mr. A equals to, what is the sale value? Gross liability minus input tax credit. So what is the gross liability? 1,25,000 into rate of GST how much? 12%. Where we have IGST 12% we have minus ITC 13,320. 1,25,000 is the price at which it is sold here. On that 12%, 15,000 minus 13,320, that is 1,680. ITC available to Mr. B. How much is the ITC available to Mr. B? 15,000. Because A will charge that 15,000, this 1,25,000 into 12% is 15,000. So this 15,000 will be charged to Mr. B. So B will take ITC of 15,000. Understood? Now in the previous case, how much is the ITC taken by B? IGST, whatever IGST they are paying. 15,000. You understood the difference? What? Mr. B should end of the day take 15,000 only as ITC, means his burden should be only 15,000. But what happens here is that A is not required to pay any GST in the previous case, because entirely B is only paying. But in this case what happens, A will pay, take it as ITC and in turn recover it from Mr. B. These three combinations, yes, thorough. Next, we completed exclusions from supply, and as a part of this only we discussed that in case of warehoused goods what should be taken. Sale of warehoused goods under customs. Now tell me, what are all the exclusions from supply? Come on. Yes. Sovereign functions of government. P. Post. Government. Constitutional. Nominated. A. Actionable claims other than specified actionable claims. Then L. Legal fees. Fee collected by court or tribunal. Now in this regard, one point, High Court or tribunal will have the premises which they will be giving on rental basis for some person to operate their canteen or this Xerox or photocopier shops, then chambers, law chambers. So to advocates they will be giving on rent. Whether this rent collected by the court is also excluded from supply? No. Only legal fees, that is court fees collected by the court or tribunal is excluded from supply. If the court or tribunal is collecting any other amount apart from legal fees, what other amount they will collect? So this only renting, or they will be giving their building for a telecom operator to put a tower. You understood? So mainly rental income only. So in that case, whatever money that they are collecting will be other than legal fees, so that will be covered under supply. That is not excluded from supply. What is excluded from supply is only legal fees collected by the court or tribunal, because this point also might be tested in exam. Reason being, this is now covered under RCM. Services provided by court or tribunal to business entity is now covered under RCM, latest amendment. Okay, services provided by courts or tribunals to business entity will be covered under RCM. Sir, you said it as excluded from supply, but you are telling it is RCM. That's what I gave you clarity now. What is that? If it is legal fees, excluded from supply. If it is any other services provided by court or tribunal, it is covered under supply, and in RCM we will learn that it will be covered under RC. Then, so next L, another L. Land sale, including sale of building where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then E, employee to employer in the course of employment. D, death related. Then slow, yes, sale on high seas. L, liquor license by state government. O, outside the country movement of goods. W, warehoused goods under customs sold. Okay, and we'll take a break. Thereafter we will discuss related party transaction and the employer employee tax implications. Okay, so we'll meet at 4:15 pa.